Side hustle income and the IRS. What you need to know before you get a letter. If you have a side hustle, and even if it's only a small amount of money, this video's for you. Because the IRS is paying closer attention to side hustle income than ever before. And I don't want you to make some simple mistakes that end up triggering an IRS letter. What I'm about to share with you is not coming from some generic blog or some recycled article. This is coming from my first-hand experience dealing with this exact issue. And I'm about to give you the secret sauce so you can protect yourself. Let's start with the basics. What actually counts as a side hustle? In plain English, side hustle income is any money outside of a traditional W-2 paycheck that you earn. Some common examples include gig work like Uber, Lyft, DoorDash, or Instacart. You see, selling products on platforms like eBay, Etsy, Amazon, Facebook Marketplace. Freelance work such as design, editing, coding, marketing, consulting, or even social media management. Then you have content income from YouTube, TikTok, affiliate links, sponsorships, or even IG. Cash jobs or payments received through apps like Venmo, PayPal, Zelle. And here's the part that most people miss. It doesn't matter if the income was part-time, occasional, or seasonal. If you receive money in exchange for providing a product or a service, the IRS expects it to be reported on your tax return. So why is the IRS cracking down so hard right now? The simple answer is this: because they can. Technology has completely changed the game. Platforms track transactions. Marketplaces track sales. Payment processors create records. Banks track deposits. And all of that data gets reported. The IRS uses a matching system. Here's how it works. They compare what you report on your tax returns with what third-party reports about you. When those numbers, they don't match, a computer flags it. No human emotion is involved. It's all automated. And this leads to the number one mistake that I see people make. Mistake number one: my side hustle income is too small to matter. A lot of people assume that if they didn't make much money, the IRS won't care. Let me be very clear. If you didn't get a letter in the past, it's not because the amount was too small, it's because the IRS didn't see it. Once they do see it, the size of the income will not protect you. For example, let's say that you earn $2,200 from a side hustle. The company sends a 1099 to the IRS, but your tax return shows zero. That mismatch is clean and obvious, and that's exactly what triggers an IRS notice. Even worse, if you had expenses that wiped out your profit, the IRS doesn't see that initially. All they see is your gross income, not your deductions. So now, they're trying to tax you on the money that you didn't even actually keep, simply because it wasn't reported correctly up front. Mistake number two: waiting for a 1099 and assuming no form means no income. This one gets a lot of people in trouble. Here's the truth that will save you. You must report your income whether or not you receive a tax form. No form does not erase income. Sometimes 1099s do get lost in the mail. Sometimes they're only available digitally. Sometimes people don't realize they need to download them. None of that matters to the IRS. If you tell them, "I never received a copy," their response will be simple. It was still your responsibility to report it. That defense does not work. Mistake number 3, thinking cash and cash apps are invisible. I'll be honest, cash income is harder to track initially, but in practice, cash doesn't stay invisible for long. People deposit it. They transfer it. They use payment apps consistently. If you're ever audited, patterns matter. Regular deposits, repeating transfers weekly, cash activity. If you can't clearly explain it with records, you're immediately on the defense. Mistake number 4, mixing personal and business money. This mistake causes absolute chaos. When side hustle income runs through personal accounts, everything gets mixed together. Income, personal transfers, business expenses, everyday spending. Now, you can't really prove what was business related and what wasn't. The result? You either overpay taxes because you forgot legitimate expenses, or you underpay taxes because you're guessing. The fix is simple, guys. At minimum, use a separate checking account or credit card. It will save you an accounting nightmare later. What actually triggers IRS attention? In real life, the IRS looks for patterns such as mismatches, third-party income reported but not included on your return, large bank deposits that don't match reported income, huge expenses with very, very little revenue, drastic income swings from one year to the next, multiple platforms reporting activities while you report little to nothing. All of this is analyzed by automated softwares. That's why the IRS can send millions of letters. It's not labor intensive anymore. How to protect yourself and sleep better at night. This is not about fear, guys. It's all about organization and control. Here's the simple approach. Track your side hustle income yourself. Don't rely on year-end forms. Keep side hustle money separate from personal money. Save receipts, invoices, platforms, and statements. Treat 1099s as confirmation, not the source of truth. Document expenses and don't guess. You always want to set aside money for taxes as you go. Personally, I prefer reviewing this quarterly instead of waiting until the end of the year. Waiting until April, especially with mixed accounts, it could turn into an accounting nightmare. Let's bust a few common myths. Myth number 1, if it's paid through a cash app, it's not income. False. Income is income, regardless how it's received. Myth number 2, if you didn't get a tax form, reporting is optional. False. No form does not remove the obligation. Myth number 3, if you don't have an LLC, it's not a business. False again. You're still considered a sole proprietor. Myth number 4, if it's a hobby, you can ignore the income. False. Income is still income. in most cases. A real life example, let's say you earn $6,000 from a side hustle and you had about $4,000 in legitimate expenses. Your taxable income is about $2,000 ballpark. Maybe that's about $500 in taxes. But if you don't report it, the IRS might demand the taxes on the full $6,000, which is closer to about $1,500. You know why? Because they don't see your expenses. Now you're stuck proving everything after the fact. Months of stress, penalties, and interest. All of this is avoidable. Here's some of my final thoughts. Side hustles are more common than ever. The IRS has adapted to this new economy. They want their money, and they're not playing. And if you give them a reason to come after you, trust me, they will. So don't assume it's too small. Don't wait for forms. Don't treat cash apps like invisibility cloaks. Don't mix personal and business money. And don't wait until April to take this seriously. If this helped you, please subscribe to my channel. And always remember, share it with someone who needs to hear it. Love you guys. Take care. Peace out.